Good afternoon to another podcast and traders community. Welcome, punters, dribblers, traders and investors, and another continuation of the glorious short trade. We have live coming from with Madavi's pet sitting there on the couch, cleaning up in the dump from all those that have to cover their margins today. You can see that live on the screen there. We have, of course, the glorious one. We have Mega Johnny. If you recall, he put you all in some really good short trades next week. And we have the legend himself, the great Chemo, all sharing us today. So we got a continuation of the move, and even better, what's really nice, it worked out. Natural gas and oil also got pounded. So it's been one of those great days where we got the trifecta of shorts working. And we actually hit Madav, and he's going to fill you in on it, but we hit his first target on the downside today, his first minimum target on Nasdaq. We hit our first minimum target on the S&P today. It tested that 4,000 after it broke that shelf on Thursday last week. So we're going to chat about that. So without further ado, remember, this isn't financial advice, political advice, love advice, social advice, eating advice, no advice. It's just a bunch of old traders dribbling away with what we saw and what we see. Some of it's good, some of it not so much. But anyway, in all seriousness, it's very clinical in what we do, and we will share it. So where we are now, oil down at 103.09. S&P cash just over 4,000. It dribbled down to 39.80 today. We have natural gas. That's the one I'm looking for. Almost at 9 on Friday. At 7 today. Massive move. And why we say dribblers beware on that little beast. Nasdaq 12,200. And Vol sitting up here at 33,800 Vol X. Remember, that's a little bit under VIX. So let's start with the great Nasdaq. This has truly been a glorious trade. And Madavi walked everyone through it when he first put it on and why, and when he was taking it off and how he was trading it. So without further ado, let's start off with the weekly, Madavi, and we'll walk it down. So here's that weekly.
Yeah. So basically, I talked about, I think we pretty much topped out in this market, I felt like, and I put on this position. As you well know, the pain has suffered the last couple weeks through it. And my first target, I said, at 2,000 points, I'm going to probably take a little bit off. We might get a bounce. So I took half of it off. I'm still holding the other half. And I'm hoping we get another one of these bear rallies over here, up 600, 700, 800, and I'll get short again. So it's I'm only bummed it didn't happen faster and sooner. But I think we got a ways to go. This market, this Nasdaq, what is that, 15,000? I remember when this thing was at 800, 900.
Mate, you're aging yourself there. None of us really remember that. Come on. We read about that in books when we were young.
And so if we go back to 1999, remember we went up to 5,000, right? We came back down to below 2,500, and then we tripled down from there. So I think we're into another movement like that. That's what I'm hoping for anyways.
So it looks, if we look at this chart, our whole thing was whether this had to hold, right? So it had to be an A, B, C. For it to be bullish, this had to hold. Well, that all got obliterated. That was your last in the bigger runs. But it's one disaster after another as far as the news that just keeps coming out. We'll talk about that later with Upstart and stuff like that in earnings today.
It's always been bad, but the market always ignored it.
Yeah. So finally it got top heavy. Finally it broke, right?
This was like we call it what? The industry, like the Teflon market. Any kind of news you throw at it, it just kept on going up until it doesn't, right?
Well, you know what? Everyone bags Powell, but Powell said what was going to happen way back in November, and we all clued in on it. Hey, we're going to tighten interest rates, even if it's a minimal. It was just even though it's minimal, and really the bond market's done all his work. And then they're going to tighten up the free money. But just look at what it did last week. We had the Fed meeting on Wednesday, and they've bought the crap out of it because he said we're raising it by half. Inflation's out of control, but we're not going to do 75 in one sitting. I.e., next one we're still going to do it a half. That's what he said. They bought it up, and then it gave us that great short. I think that was one of our best ever trades, actually short term. That one last Thursday. It was a Thursday, right? Yeah.
Powell had Donnie, which he was all over the markets, right? He was like looking at every tick and everything happened.
He had his Reuters screen on his desk.
Sleepy Joe, which Joe, only thing he did was cause a disaster and cause inflation for gas prices. So the guy's never had it really good, has he?
Joe just says it's all bad oil company. Oil company's bad, all that, everything's bad, And then and the other side of his mouth, hey, can you guys pump some more oil? Oh, we hate you, but yeah, let's do that. And then Pelosi's the same, and it's not good. Not that we're saying Donnie pumping the market was good, but now you've got absolutely nothing but negative energy, negative comments, negative this.
That's the biggest cause of inflation, what he did. He came in with his fucking agendas.
Oh, the ESG shit, yeah.
I don't think Powell could have predicted that. I think Powell was thinking maybe Donnie's going to be there to his 2 terms or whatever.
Well, that's my point. Everyone blames Powell. Well, it wasn't his policies. Look, the free money,
like, oh shit, now I got this gas inflation thing with Sleepy Joe pumping it up. He goes, whoa, I didn't expect this one. I already had enough on my plate. So
right.
People don't understand how big of a difference it is when you got a new commander in chief making new directions. When you're a Fed guy and you lay out these policies to get out of them, I mean, you do it for like the long term, but it's something dramatic as 2 different things come into office and way different philosophies. Man, that could really throw a wrench in your game, especially when you got the greatest policy going,
Well, not only that, don't forget they did that lockdown. They shut everyone down. Everyone lost all their money, all their negative energy, the mental health aspects, all that. And then you had a lot of the punters and dribblers, all of a sudden they were stock traders. That's why we warn about don't listen to those pricks.
Market took all this punishment, all that stuff happening. Like nothing, just a couple down days.
Don't forget they did that lockdown.
But man, Sleepy Joe with gas prices and the inflation getting rampant because gas prices is the number one thing that'll cause inflation. Everything you touch is on it, right?
Yeah, you're using energy, right? That's your energy.
Everything. So the merchandise doesn't fly to the shelves, Or it gets there, it's got to come from China and somewhere. I don't think it's got like a magic wand goes, shoot, go to the United States. This is the number one thing, right?
100%, mate. 100%.
So I think that really threw this whole equation in and really sped up everything we're getting now.
I mean,
this is a boom and bust economy. It's just to the degree it's going to happen.
That's the nature of capitalism. It doesn't go one way, and everyone. So when it gets carried away, you get all the entitlement thing, which goes both ways, right?
Yeah.
It's and we're in that phase right now.
Yeah. So I think the market's still way overpriced. I mean, God, I see.
Well, I saw. Yeah, someone did so basically, 38% of a correction is your minimum correction, basically, usually. And we're at 17, I think. I saw someone said we're 17 off the all-time high. In the SPOOs.
Bear markets usually go what? Like this guy was talking about like 40, 50%. The extreme ones, like we had 2008, go 60. That's what was
61.8. Yeah, it's a Fibonacci number. So really, and that's why we use math. So this was a perfect trade. This is daily, plus 218. So look at that, 1, 2, 3, 4, 5. So this is playing out the first wave down. It's basically what it is, 5 waves. We really haven't seen panic. You look at everyone, there's a lot of... so they seem on CNBC to still not get that. They all think, oh, it's value, that people come on about value, even though these stocks have lost 80%. The dribblers all over Finchwit. Bear in mind, most of these, it's a second job. They don't know how to trade. They're full of shit. They have no lives, so they got to say it. And there's 80%. There's good people on it. The good people get knocked by these other people. So that's why we bid hard on it. In reality, these same people were bloody telling you to buy up here, buy. And look at there's a reason we got the DDD, the Dribbler's Dirty Dozen, and some of those stocks really are paying us really well now. So that's hitting a record high. Remember, that's an inverse. You had Path, AI, what's the other ones you got? Palantir. These companies are way overpriced. Most of them lose money. Yeah, we've made boku money on that. We've walked you through, as we've said. Who else? Fubu, Donkey King, or Draft King, sorry. But there's a reason why we're short them, right?
Hey, man. Gambling, man, alcohol, stuff like that, in the long run, they do well.
But it's all a value. It's all about value. That's why you never be coldish about a stock.
But listen, DraftKings right now is trying to take down states right now, right? So it's trying to get votes and stuff, get into California and all this. Once that thing's all set up and done, they need to spend money. They need to pay off
Right. But there'll be someone else replace these companies more than likely.
So it's just you need tons of money to be able to do what they're doing.
Well, to get out of the dirty dozen, they got to start making money. They got to not be coldish. And anyone that recommended these stocks to you at those high levels, if you're listening to them, unless you're listening to them to go the other way, like Gartman or Annie, sorry, not Annie. Who's Johnny's girlfriend? Kathy.
Yeah. No, Kathy Woods.
Yeah.
So a company like what do you call it? You just said
DraftKings.
It needs to get into every state it can and build it, and it's got to get the voters, it's got to pay everybody and stuff like that. So it's a losing proposition until it's like how the tobacco settled every state. They gave them money. It's okay, we're settled, we're in, right? And now look at Philip Morris, just kills it every time.
Yeah, but so usually there's one makes it, but you got to do it responsibly. And so probably I'm not. So DraftKings, what brought them undone was that they'd keep paying and paying rather than consolidate, which also told me, hang on, that tells me that, so you keep doing that to fudge the numbers, basically new revenue. A lot of companies did that. Enron, most famous, right? I'm not saying DraftKings Enron, but what I mean is that that's why a lot of companies in this so-called growth phase, which is the biggest misnomer I've ever heard, keep doing that, right? Who's that one we saw getting whacked today?
Yeah.
With Upstart. What was that one? SoFi. Remember they just did a takeover not long ago? So they keep trying to do that, and then you don't have to look at their profitability. That's the theory. And as Checkmate said today, Upstart with today's earnings in the bull market, they wouldn't have cared probably. Now it's at $42 from $400, right?
Hey, I'm long this stock right now.
Hey, let's not talk about that swearing. Being longs banned. Chemo, what did we say about that? You got to leave your longs at the door, right?
Hey, man, this is. Hey, if the stock's down 40 points, I'll take a little shot at it.
Okay, Kathy. Kathy.
So I just got cut back by 40 points, so that's 40 less I got to worry about.
Right. Well, you only got 40 to go, right? But I think they actually make money. They just warned. But we'll look at that in a minute. Let's look at the SPOOs real quick. So SPOOs weekly, same pattern, nice and clinical. Remember, it busted all out. We talked about that on Thursday. And I think I had a few longs left, and I said, bugger that. And we didn't do a podcast on Thursday. Friday, usually we don't, right? We have a life. But what I know is on Friday, I was saying to Madavi, some of the bursting that was going on as I was just hitting. So what it meant was the real sellers are coming, like margin sellers, and the machines would buy and buy, then selling and selling. And, Snap's one of our main ones we short all the time. And we actually I got overfilled. It took me a while to get out of it. Because you think, you can get it. So it was the first time in a long time that I recall a market that broken. And so basically me and Madavi's biggest argument between us was I thought we might have a little bit more of an easy consolidation on the way down. He said, no way, mate. They're just going to smash it. And that's what started to happen on Thursday, Friday. So he's 100% right on that.
Well, I mean, this market being nice and gentle with it doesn't work.
Well, I like nice and gentle, right? You like hard and fast.
But this market's too bull-headed. You need to smack this bull to get him down. He doesn't listen. He doesn't want to stay down there.
Yeah, you're right. I guess I should know better, right? It's more like a rodeo. It's kind of like Bone Crusher,
Hey, I shorted this market when you told me not to, and I got my ass whooped.
Oh, last year. But so everything's changed since then. We got the plus 3/8. We got interest rates.
Hey, I went back for seconds.
Yeah, seconds. Yeah, well, I think what you did was recognize the change, and then you've been very systematic, and you've been upfront with everyone since we started doing that podcast. I mean, so we're pretty. What do you call it when you're upfront about everything?
Yeah.
I'm trying to think what the word.
Hey, let me tell you, the thing I was able to short this thing is I got lucky because it really jumped up the first couple of days on me, and I got in the
not really, a little bit. It was the only time you really, but you were still up at that point. The only time you ever had trouble, but you were still up really, was that
is that one day
like that Wednesday. Yeah. But you also at the same time went long against that with different stocks and stuff. So it's not as if you didn't do it.
I cut back a little bit, then I got back at the end of the day with more. But anyways, if that would have happened, so let's take an example. Let's say if it would have, like I would have shorted it, then we would have gone down 2 days. But that third day, if we would have had a 500-point up day, I would have got blown out. I would have got stopped out, and I would have been out of the position. But since I was already like 1,300 points in the position when that happened, I was able to hold on to it.
Right, but you reckon, I think another big change, we changed the nature of this room, and up in about 4 months ago, we'd let dribblers come in that weren't pro traders to say, we can help them, all that, and we kind of got hoodwinked a little bit. Look up that word if you're not Australian. And we let it, and it gave us a little bit of bad habits where we weren't as aggressive on the short. We let go some of our macro rules, but it didn't take us long. We got rid of that bullshit, but it awared us. Is that a word? Awareness, or made aware of how that ilk thinks, or that they're true, that we didn't know. We just thought if you traded, you traded. We found out people just talked about it or weren't in it or had big losers, were averaging down away from, like, we might do the odd average on a news play, right, or an earnings play, but that's it. But that was a big change. And then, so that was a good thing, really, because it told us what's out there, right? Because we know what the hedgies are doing and all that. And some of those dribbler stocks were the same stocks we were heavily short. And as I mentioned before, some good people we know at some big hedge funds are massively short these. And I always say, the only reason you're bloody long a stock is because people are short. You're a fool and you don't know why these blokes are short. And that one, what was the one with, so stuff that we're heavily short, AI, Path, Palantir, Rivian. Well, we're not short Rivian, but people we know. We wish we were, right, mate? But we could never get that short, unfortunately, other than the odd day trade. For a reason, right? They're overvalued, they're pumped. I mean, firsthand, we know blokes that have pulled in 80% on some of these. Some of these we have, but with size,
They usually left pretty quick because, I enjoyed making fun of them. It was pretty.
Yeah, and then they'd bitch and moan and defame and. But the market has a way. The market. So, right, we've always compared it to football or fighting, right? Like football, I'm talking about gridiron, rugby league, stuff like that, where it's physical and you got to get your defence straight, and it isn't for the faint-hearted. And people laugh at that, but when you see what's gone on in the last month, and some would say in the last day, even today, right, that Upstart, it's the best similarity it is, because you've got to have that defence and you've got to have that hardiness and sharpness to adjust on your feet, right? So, I mean, I can't understate that. People think I'm joking about that. I'm not, I mean, look at Upstart, that freaking stock where
Love
was $400, and I think I put it on Twitter because people kept asking me about it. There was a market manager, money manager went on CNBC, remember, and he was saying, "Oh, I bought it." They asked him what it does. He didn't know. It was $400.
Hey, I shorted this 300 shares. Remember how much I lost on this sucker?
Oh yeah. One of the dribblers. Yeah.
2 days. Thanks, Dribbler guy.
Yeah. They're very costly, but we learn a benefit from it. Let's look at some stocks before we look at the other markets, eh? Expedia. Remember you, dude? You traded that at where'd you short that at?
Oh, it was like 320 and it went up 360.
Dude, it's 127 today. Look at this shit.
Which one?
Expedia. I'm looking at the ones we shorted last week.
Expedia, that was at 98. I got.
No, it's 127 today. You've shorted it way above that.
Yeah. Oh yeah, before that, yeah. But every time before it was never no good because they always.
I didn't want to do that because I didn't want to do another 100 because I'd short so many other stocks. But look at that was a bad mistake. You called that at 190. It was 192 you were short. I got your trade right here.
Expedia was a.
Dude, $70. Yeah. No, 190. 190.
No. It was done last week. You're talking about, right?
Yeah. And it's 127 today.
90. Look at a chart.
Yeah, I'm looking at it right now. I got it up. Look.
Yeah, it was 98 where I shorted up.
No, 198, not 98, 198.
No.
Yeah, I got it up. Look.
Really? No.
Yeah, hell yeah, mate. Here's the day. This is our earnings right here. 185. We can bring up our trades if we want, but this is where you shorted it. 185. Remember? And you stayed short overnight. It got drilled. We did a podcast. I'm sure we did a podcast.
I'm trying to look at my trades and stuff.
This was on the 5th, a week ago. 2nd. Yeah. Start of the month. Took it in the shitter, remember?
Maybe you're right.
Excuse the French, everyone.
Oh, yeah, you're all right. It was 190.
Yeah. Hang on. Kimo, did you hear that? That's a recording. You just said I'm right.
100% right, mate. You're right. Look at that now.
Okay. So the other one we shorted, we may as well look at it. We got them up. So we shorted this one on earnings the same day, and we had to hold it overnight. It was called Match.com, which is the dating ones, right? So if you remember, we shorted it, and it went to $2 spread, so we had to hold it overnight. And then we got out the next day at, this is a good one. This is like a $70 winner. But look where it is now, mate. Look where it is now.
You did. I think you held more than I did.
Yeah. Well, because I was too stubborn and I got too much Scottish blood. I wasn't getting out too cheap.
You were going to call them up. Hey, I'm a stockholder. Let me get a free membership.
Yeah, the reverse stockholder. But so we've done that. Here's daily, right? So we've shorted it. So at 175 maybe? We'll have to look at it. But again, we did this in a podcast. So we've shorted it the other day. Where's our alley? MTCH. So we did this, right around here, right? And it fell down. Look where it is. So all these stocks are just getting killed. It's $70 today. So you got to keep in mind. So this is where we sold it. It was 90 something. And then that's the interesting thing, people. These stocks, even after earnings that are big names, this is a big stock, Match.com, right? This is the earnings here. There's no volume in them. So if you're a heavy invested fund, you can't get out of them. So this is where we did it, remember? 84 and it gapped down the next day. We made like $10 or something. But it's gone another 10. And so this is so this is one of my main shorts, as I've talked everyone through. EQT, remember I went short energy last Thursday and Friday, oil, gas, and explained all the way on the charts. So EQT and P10 and Oxycontin are my three main shorts in that space. And Southwestern Energy, SWN. So EQT did this silly stuff, but as long as you have the right size, the right structure, eventually they go. And look where that ended up today, Madavi. $36 from 44. That was a great trade, I got to admit. That was plus 4/8. And who else did I short? P10. I love P10, don't I? My mate Sean and I reckon, are the only two that ever trade that stock. So here's P10. So what I want everyone to notice is where these come from. They're all overbought. They're all see, remember? Plus 4/8. And then they just break down. And so what you're looking at is stocks. We showed tech and then energy, where everyone's the one way, right? So you're minimizing your risk because everyone's one way, particularly in a bear market. So remember the other reason we got real bearish, Madavi, when you got real bearish on Nasdaq, was when Russell did that spit. Remember that? Did we lose Madavi for a sec there? Is he back on the couch? So we had that the other day. You can see here where we had that big spit. So again, a spit of a spit is when you get a failed rally, everyone goes one way and you stopped out. So that was on Russell. Okay, let's look at energy real quick and then we'll get Madavi back. We'll finish up with Upstart. So this is either a 3 or 5. You still have to respect.
Gold.
Yeah, so I was just going through those energy stocks. Did you see that? Okay. EQT. Okay. So I just see EQT. So that was a tough one. I think you traded with that with me once. They go a bit nuts because you got that EQT. Remember that? It took a while, but it finally, kind of like all of a sudden it happens when you're short. It's a little bit different trading.
Yeah, gas and oil, I'm not like maintenance stuff because, I'm in tune with the market. And when I get in those, you got to have sometimes opposite thinking. And I'm just not,
Yeah, I'm a little bit of a punch drunk fighter sometimes.
I can be thinking it goes with the market. It can be doing the ops thing. And I got hurt doing that one time just because I'm so used to trading stocks that are mostly going with trends of the markets and something that's not.
So commodities and Forex kind of trade the same. But what happens with commodity stocks, they get overdone. So sometimes you do get stopped out because they got the equity people in it, which is what you're saying, I think. Like I had to stop out on Thursday. I bought that cold. Remember that? That's that reverse oil and gas, natural gas. I stopped out of it for like 30 cents. It went down another $1. Then it's a reverse, right? So today it's up massive. So, but sometimes you just got to remember, you got to always respect your risk, Particularly on natural gas is brutal. That's the one I always say, punters and dribblers. If you're not a natural gas person or talking to someone from it, don't go near it. Because look at it. In one day, nearly $9, nearly $7, and these are big futures points. These are a lot bigger than Nasdaq or S&P or even oil. These are big points. And so a very, very unforgiving market. I've seen guys, no bullshit, lose $1 billion on this in hedge funds and stuff, $1 billion plus. I know a bloke who lost $1.2 billion on an options position on natural gas back in the day. So this is, and it's fast and it's weather and it's, now you got, so back, it used to just be domestic, Madavi. It was like the weather in America. Then we started exporting LNG. Now we got bloody political interference with Biden promising. So I said this was a great short. Why? Because it went up. Part of this move up was Biden was promising LNG. There's only 8 ships available. They're all fully booked. How's it going to happen, right? So it could really only go one way, right? This one, it was a great short. That's why I shorted EQT, P10, Exxon, Chevron, Oxy. We went through them all. But the cold bit was a little bit more dangerous. That's a double or triple reverse ETF. Sorry, mate.
Mate, he's got Nancy. She'll get on a witch thing. I'm like, doing.
Oh, mate. Yeah, rumor has it she's not real happy with the Tesla longs she's got, right?
Oh, yeah. That girl's talented. She even went to Ukraine, everything. Man.
Ukraine.
My wife went there listening for Mother's Day to give them all Mother's Day gifts.
What was that, an Uzi? So let's have a look at the daily. So that's the fundamental bit I just gave you, the macro geopolitical. Look at the technical. Plus 3/8, Cajun overblow. So just look at all your rules. Chicow, Cajun, Tankin, the flat, the pull, the twin, right? Plus 3/8, all that Nova waves. If you're not familiar, and don't forget Sierra, just everything we do fits on it really perfectly. It's the best value out there. If you got any questions, just hit us up. We'll tell you. But look at this, just boom. And once it goes, this thing was a gift from God. Bang, flat, Cajun, bang, tank, like down here was flat, now it's turned up. Then we got flat tanking, bang, and look, it didn't even stop, mate. It just waved at it. Previous high, remember all the stuff we teach you? 1, 2, 3, and now look at it. 6/8 from 3/8. This is classic stuff. Anyway, let's look at oil. We don't want to bore you too much, you stock people, but these are great stocks as well. But you want to understand this. If you're, as I said to Johnny today, you're trading Oxy or something, you better know what oil's doing, right? So remember, let's look at weekly first, because what did we keep saying? Tankin, Cajun. It couldn't get over the Tankin, remember? Bang, bang, bang. Finally, and then Tankin turns down on the end of the week. Look at this. Beautiful, beautiful setups. You can't ask for prettier stuff, really. But, again, these stocks are violent. They're thin. These futures. There's a lot of people blowing out on them. We've talked about the commodity risk, Trafigura, Vitol, all the big players. Margins went through the roof. You've got people like Mercuria that are Russian, backed. Yes, they're in Switzerland, but it's Russian money, all that sort of stuff. So there's a lot of game changing. You need to be aware of it. And I don't want to, so there we have it, 100%. Boom. Look at that.
Was Johnny here?
Johnny's showing up, has he? So Johnny was talking about crypto. So here's when Meta Johnny warned you on Friday about this, or Thursday, sorry, about Bitcoin breaking down, and look what it did. Busted 36, 31 right now. Actually, I think the great Checkmate warned the punters and dribblers about this. Me and Madavi are like, if you ain't short here, you're a fool. But hey, finally we look smart on the Bitcoin stuff. But look at that, it broke that. Look at Ethereum, same deal. Boom. Look at the Bitcoin.
Bitcoin 20,000. In the next couple of
months. I'm still on the offer at 20,000. Still on the offer. Still selling, mate. Selling it. Anyway, you can see that. What other markets have we got to look at? Have we looked at them all? I think we've looked at them all. Have we looked at them all? We want to look at Upstart, right? We want to look at Upstart. Do you want to look at Upstart?
Yeah, dude.
Yeah. So
this was Johnny's other big short recommendation a week or two ago. I can't remember, but when he came to the dark side, which is what for some reason he calls the short side. I don't know why, but Upstart was the one he wanted to. He said if that's not the greatest short, I don't know what is. Right, let's look at that again.
That's not a good short today, 76.
Oh, mate. But even after the earnings, we banged that at $55 and bought it back at $47 almost instantly. Huh?
You need a big mattress when you're trading.
Yeah, this stock will add to your mattresses. It will add to your mattresses. So we're not going to go back. Well, let's backtrack on this one because this is the one everyone goes, oh, have you got that video of that guy on CNBC? So we put it up there. I found it's on the Twitter. At 400, the guy's bought it up here. They've asked him, why did you buy it? What they do? He didn't know, right? He had no clue. So I don't know where he got out. But so here's an earnings back in November. So I guess that was the half-yearly one. Gaps down. Look at this shit, mate. 320, boom. Comes all the way to... And what's funny, the bloke's telling you to short it here. There's a dribbler, well-known dribbler, one of the great dribblers. He short, doesn't do anything, then looking to buy the dips, right? Fuck.
Hey, look at the last run-up right there. That was me getting caught in that short.
Yeah.
They go, woo!
Yeah. And so look at it, and
love it.
Love it, love it, love it, love it. And so let's go to the hourly. Well, let's go to the 10-minute spectacular today. So they fell all day, as you know, half of the tech world, and then the announcement comes out.
Crank it up.
This thing got cut in half on the earnings, and so we're able to short it here. I mean, a gap. I don't know where the actual gap, but we were able to get 55, an immediate buyback, and then I was done with it. I just did that one. Remember?
Here's a good thing someone taught me. Right, if a stock can go up 50 points, 60 points, and like really fast,
it can go down.
Could now go 2 times as fast and 2 times as much.
There's a saying for those that grew up trading commodities or the Aussie dollar, and
when you're calculating the downside, just imagine when you're calculating your upside and you want to calculate your downside. So you go, hey, I can make 60 points on this really fast. Well, then remember, you can lose 120 points even faster.
Remember this, right? It's up by so if you grew up trading commodities or forex, there's an old saying: up, down. Up by the stairs, down by the escalators. And you can see that, right? I mean, and it's fast, it's unforgiving. And the other thing the thing is with stocks, all of a sudden everyone's an expert. We've said 100 times, you've got to go to college to be an engineer, to be a doctor. But somehow, when the math psychology, the mathematics, economics, all that stuff that you should really know, all of a sudden you don't have to know. And that's why you get this stuff. That's why you get these kind of things. I mean, I can put them on. Let's go through our dribblers. Some of our dribblers have got destroyed today. Destroyed, I tell you. Like, our favourite one is this piece of shit. That I have one body, no bull crap, short 1 million shares of this beauty at 27.32. And what did he say his minimum target was, Madavi? Remember?
0.
Well, that's your minimum target. What's his minimum target? It was 7.42. Where are we today? We traded there. We settled. The low today was 7.32.
Love it. I'm so short, man. I'm going to keep that.
Oh, yeah. He's, everyone we know in the DDD is still short.
I got back into it today, you know?
Hang on. You just got recorded saying that. We need to scrub that.
25. Yeah. Pre-market.
So, so they had earnings today. They got drilled again today. There is a gap there. It will be interesting if it can fill this gap up to 927. So,
you got to remember one thing about this guy over here, right? He's actually the smartest guy in Wall Street, right?
Thiel, yeah.
He was the highest paid CEO last year. $1 billion for a company that doesn't make money. You know, so
hell of a deal.
I can tell you all you need to know about Palantir. You know, what's the guy in for?
Well, here's another little aside little bet on that one. So, if you recall, Elon Musk claim to fame where he made his first big lot of money was on PayPal, right? Who did he make that with? With this guy, right? So and you know, Elon never forgets that. So if you noticed, he sold out to pay his taxes. What was it, 15 billion worth of Tesla? I can't really remember. But he did 8 the other day. He knows that these things don't go up forever. They're not fools. And so he sold another 8 to buy Twitter. Who knows? He might have only bought Twitter to cash out. We don't know. We're not Elon Musk. And he may say, you know what? Twitter, you bullshitted me on. We already know that. That's doing the rounds on the numbers. So he may pull the plug on that.
Hey, the best about Musk is he's an artist, you know? He throws a little thing in there to everybody on Twitter. Should I sell my stock? And
he's a magician almost. Yeah.
Everybody votes yes, and he's like, okay.
Yeah. He put it on them. He told them what he's doing. So you can't, he's told them what he's doing.
Carrot in there, you're right? So he throws a carrot in there. Everybody's looking at the carrot.
Plays to their ego.
You're like, I'm going to sell a bunch and raise a bunch of money. What do you guys think? You guys love it? Oh, yeah, we love it.
Hey, you made the decision for me. So this is another one of the Dribbler specials that we've first started shorting this little beauty at 100. Do you remember, Johnny, when I first started shorting this little beauty? AI piece of shit.
Yeah, I got out of that.
140 odd, and I was down a little bit here. Remember this? I was down, and then it's just got dribbled. So this we're running in. So all these companies have a lot in common. The same people. Do yourself a favor. Watch that show. I think it's over on Amazon and Netflix about the bloke who wears no shoes that WeWork basically cost himself billions of dollars from being arrogant and tech and so out of reach of reality. And what? So they're all kind of. I'm not saying they're all like that, but there's that feeling of a lot of these entitlement and rich. And basically they got lucky, timed everything. A lot of these companies, bang! You got to still make money. You're a company, right? It's funny, that old conservatism comes home to roost. So look at A1. In the toilet, 1470 today. Beautiful. Okay, let's look at another one of our DDDs. G loves this session. Not G the dog, G our mate at Commodity Vol. Loves this session. His favourite session, he told me. The upgrade of the DDDs. So Path is another one. Look at this. Oh. So some of these will go to zero, punters and dribblers. They will go to zero. Which one? We don't know. But look at this. 80. And don't forget, this was a new IPO just last year. It's already gone from 88 to 15. A lot of these seem to go into the low digits. Who else is in the Donkey King's another one? This is good viewing. This is almost like porn, isn't it? Do you think this is porn? Is it really, isn't it? So look at Donkey King again. And it gave you easy heads up. This here was when they started doing all the takeovers, right? Real easy. And the beautiful thing with this was Vol never got high in this. I never understood why I could buy puts for so cheap on this, remember? I love it. God. I mean, use another one. Another one. Actually, they're just gifts from God. God's a bear, by the way. He's not a bull. He don't want you to get all greedy and carried away. That's my religion for the day. 210 to 50. What a gift. 210. We got in here. Remember, this is where we all got bearish on this stuff, November, December. That's when it changed. You had plenty of time. You already had the markets rolling over. You already knew people were caught. Task is another one of the dribblers. This is a beauty, isn't it? This one. Look at this little dribbler. Look at this dribbler. 84 to 23. And they reported today, I believe. So let's have a look at this little performance. So, that's a surprise. That's a surprise, Madavi. Dribbler reports earnings. Gaps down another couple of bucks. That's a surprise, right? So anyway, you get the thing. We're having a little bit of fun because it's kind of nice when you write about stuff and you're a trader and you're booking profits. Basically, that's your end goal, right? Anything else we need to look at, or do we cover everything? I think we covered everything. Yeah, I agree. Okay, so let's finish up. You know your levels. So the question is, do we bounce? We're going to bounce at some point. So that's why you book your profits. You can either do that straight out, take profits. You can do options. You can sell puts if you're short, right? At worst, you're taking profit. You're getting money in. The hard thing is when vol's really expensive is to cover via calls. So you can do a call spread or something like that. And it depends on your outlook, how far it is, your horizon. Many different tools to use all those that are out there. But the key thing is we kind of sound like we're being arrogant. We're not. We're just probably, it's a good feeling when I guess you've had so many people the other way against that. And what a fan. It's really good when a good mate of yours has really done really well, picked it 100%, cop crap from a lot of arseholes. And that's the nicest way you can put them and been rewarded. So that's it, really. 102.69, 4,005, 33.67, 12,244, 7.15. Natty, look at those levels. That moves violently and with things like, Your options levels are huge. So your financial movers, that's why it moves so much. People tend to get all too much one way. There's massive size. Remember, on these markets, it's much bigger in the OTC market than what you see on an electronic market, okay? So understand that. And that's it, really. So we will head back to the couch. And remember, if any questions, please hit us up. Like what we're doing is always appreciated. And that really subscribe, and that really helps us. And with all those algorithms, and the more we're out there, the more it makes you feel like you're doing something useful, really, rather than just talking to yourself. So on that note, without further ado, Madaba's just finished up on a trade. But we'll see everyone tomorrow. Thanks everyone for joining us. And bye now. And if you can't be cool,